Hello, everyone, and welcome back to version 2.0 Finance. My name is Mike, and today we're going to talk about mutual funds. There are several different types of mutual funds, like bond funds, ETF funds, even cryptocurrency funds. But today we're going to talk specifically about stock funds. As always, this video is for general education and entertainment purposes only. I am not a financial advisor, so if you have any specific questions about your financial situation, please talk to an expert. So to understand what a mutual fund is, we first need to understand what a stock is. So let's use an example. Pretend that you like Pepsi stock, which is actually PepsiCo company, and you would like to invest in that company. You can actually buy shares of that stock. You buy 1 share, 2 shares, 3 shares, maybe 4, right? And let's pretend that share is trading at $100 per share, meaning every share you buy is going to be $100. You can go onto an online brokerage account, and with a few clicks of a button, you can buy into PepsiCo company. All right, so let's say you bought 1 share for $100. And let's say the company had a great quarter. Its revenue rose, its profits rose, and therefore the stock probably rises, which means if you spent $100 on that stock, your stock is going to be worth more than that. It might be worth, again, for an example's sake, let's say it's worth $125 now, and you bought it for $100. You can turn around then through that same online brokerage company. You can sell that stock for $125, which means you made a $25 profit or a 25% profit. Now, conversely, let's say Pepsi had a bad quarter, right? Maybe revenue fell, earnings per share fell, maybe they ran into some financial difficulties and the stock fell. So if you spent $100 on that share of the stock and it dropped to, let's say, $80, you would lose $20 if you decided to sell the stock. You don't have to sell it, though. You can just hold on to it until it hopefully goes back up. That is essentially what a stock is. An analogy that I like to use is, let's say the company is a pizza, a big, giant, round pizza, and you want to buy into that company. You can buy slices of that pizza. Now, in the illustration here, there's only like 8 slices of pizza there, right? So if you buy a slice of the pizza, in real life, your slice is actually going to be a lot thinner, razor thin, let's say, as compared to the illustration. But you get the point, right? So the pizza is the company. You buy into it through shares of stock, and you have partial ownership, fractional ownership in that company. And large companies have hundreds of thousands, oftentimes millions, tens of millions, maybe even hundreds of million shares of the stock. So again, you're buying a small fraction of that stock typically, unless you have a ton of money to spend. So now that we understand what a stock is, let's talk about what a mutual fund is. And in short, a mutual fund is just a collection or a basket of stocks, right? So let's say, for example, you had $1,000 to spend in the stock market. Sure, you could take that $1,000 and spend it on the PepsiCo company, or you could take that $1,000 and spend it on Apple or Tesla or you name the stock, right? And you can spend that $1,000 on it. But what if you wanted to diversify a little bit more? I suppose you could buy 1 share in Apple, 1 share in Pepsi, 1 share in Tesla, and some of these stocks, keep in mind, are over $100 each, right? So it starts adding up, and at the end of the day, you can probably only get a handful of stocks, but maybe there's some others that you like as well. And maybe you don't only want to own 1 share of each. You want to try to figure out a way to maximize your funds, right? So that's where mutual funds come into play. So if you did have several companies that you wanted to invest in, you can do a pretty quick Google search and you can try and find a mutual fund that contains all of the stocks that you're interested in. It's probably going to contain a few more though, by the way, because again, mutual funds tend to have a lot of stocks in them. But you can do a search and you can find a mutual fund that has the stocks that you're interested in, and therefore you can diversify your stock purchases. Right? By the way, clicking 1 button or making 1 purchase of shares of the mutual fund. So instead of investing in individual stocks, you're investing in the mutual fund, the whole basket of stocks. Okay, so your returns, how well you do on your purchase, is going to depend upon the average of all the stocks that are in that basket. Some stocks, by the way, are weighted more heavily than others. Let's say the mutual fund owns more shares of a certain stock than another stock in the mutual fund. That stock with the more shares is going to pull it up or down at a faster rate. But that is why people invest in mutual funds, or one of the reasons why, is because of diversification, right? So they're not putting all of their eggs into one stock. All right. They're putting their eggs into one basket, but there's several stocks in that basket, more than several stocks. So if you liked a certain company and you put all of your money into it, unfortunately, it could go down and then you would be trapped. Or it could go up and you'd have a great day, but it's more of a gamble. If you're talking about mutual funds, it's the average of all the stocks. So it's considered a little bit more of a conservative approach because you could still reap the benefits when those stocks on average go up. But when they go down, or some of them go down, the other stocks will offset it. So your losses theoretically would not be as bad. So diversification is certainly one of the advantages of investing in mutual funds over individual stocks. But are there any disadvantages? Well, one thing to keep note of, and I wouldn't say that it's necessarily a disadvantage, but mutual funds require active management, meaning there are managers and potentially teams of analysts who are picking, purchasing, tracking all the stocks in the mutual fund. And that comes with a fee. Oftentimes, mutual funds have some sort of a fee. It could be 0.25%, it could be 1%, it could be 0.5%. So if you're interested in investing in a mutual fund, make sure you check out the fees that are associated with managing that particular fund. And the one good thing though about that is you don't have to write a check to the manager of the fund. It doesn't come out of your account in any way other than it's reflected in the price of that mutual fund, right? So mutual funds, just like stocks, are going to go up and down in price depending on how well the company in a stock case does or the basket of companies in a mutual fund does. Now, you would have to do some research in terms of which mutual fund or mutual funds you would be interested in purchasing. But once you decided upon that, purchasing a mutual fund is similar to purchasing an individual stock. You'd first have to set up an online brokerage account, and then you would have to search for the fund in there, and then you could purchase it that way. You can also purchase mutual funds through your traditional individual retirement account or traditional IRA, as well as a Roth IRA, and oftentimes a 401k, which is your employee-sponsored retirement account. If you have any questions about any of those accounts, please comment below and I can do an episode on them. All right, let's talk about a specific example. And again, I'm not endorsing any specific mutual fund. I'm not endorsing any specific stock. I just happen to be familiar with this particular mutual fund because I own some of it. All right, I set up a 529 account, which is a college savings account for my daughter. And in doing so, I started researching some mutual funds because I can actually invest in mutual funds inside of that college savings account for her. And I came across a mutual fund called the T. Rowe Price Blue Chip Growth Fund. All right, and the ticker symbol is TRBCX. And every stock and every mutual fund have a ticker symbol. For example, Visa is simply a V. Visa as in the credit card, Visa Inc. It's just a V. So if you type in V space stock, you'll come up with Visa stock. And it'll probably lead you somewhere to Google Finance, which can tell you more about it. Or in this case, I'm using Yahoo Finance. So I looked up TRBCX, which is the mutual fund that we're talking about. And I can see the top 10 holdings in the mutual fund, right? These are the companies that account for the majority of assets in the basket, right? So we can see that NVIDIA accounts for 15% of all of the assets in this particular mutual fund. So you got NVIDIA, you've got Microsoft, you've got Apple, you've got Amazon, Google, Broadcom, Meta, which is of course Facebook, Carvana, Visa, and Eli Lilly. They account for 67.5% of total assets. This is a relatively small, not in the actual money that's invested in it, but in terms of the size of the basket or the number of stocks, it's considered, I guess, relatively small because it only has, I think, about 66 stocks in this particular mutual fund. So it's fairly concentrated, especially in these top 10 stocks. So when you're doing your research on a mutual fund, maybe you want to invest in a mutual fund that owns somewhere closer to 100 to 150 or maybe even 200 or more stocks to really diversify. So again, this is fairly concentrated. Now, if we start scrolling around a little bit more, we can see that 48% approximately of this mutual fund is weighted in technology, in the technology sector. Okay, so if you like technology, if you like growth stocks, you might want to consider something like this or a similar mutual fund. But there's all types of different stock mutual funds. There's value funds, which would look at more of those companies that they think are undervalued, all right, that people have maybe forgotten about, and the fund managers think they're going to make a comeback, at some point. So again, do your own research. All right, well, there you have it. Mutual funds aren't that complicated if you're willing to put in a little bit of time and do some research. If you have any questions, please comment below. And also, please like and subscribe so we can continue bringing this content. As always, thanks for watching, and we'll see you next time.